Hey, it's Noel Mathias from Mortgage 360, and today we're discussing clickbait mortgages. What are they? How do you identify them? And how do you avoid them? But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit the like button so more people like you can see this video. So let's talk about clickbait mortgages. What are they? Well, they're that ultra low rate mortgage that every bank, every lender, every broker has. They advertise it, they try to get you to click on it, they try to get you to apply now, and it is that ultra low rate that is obviously too good to be true. Now, what we find with these clickbait mortgages is that almost every lender has them. And it's not because every lender wants to have them, it's because they feel they need to have them in order to compete with the discount brokers and the discount lenders out there. And that's okay. But the question is, how do you identify them? And the way you identify them is really simple. If it's too good to be true, it probably is. And almost all of these click rate mortgages, these ultra discounted mortgages, are too good to be true. They have an ultra low rate, but they come with product restrictions and higher penalties and things that you just absolutely don't want in a mortgage. And when we talk about mortgages, we talk about the 3 Ps. The 3 Ps are price, product, and penalty. And product and penalty are always significantly more important than what the price is. Because let's be honest here. A lender who offers a 1.79% rate when the going rate is 1.99% knows that there's going to make money on the 1.79% mortgage. In fact, most of the time, those 1.79% mortgages are more profitable than the 1.99% mortgages because of the product and the reduction in features or the added restrictions that they've put on the mortgage. So how does that work? Well, let's talk about prepayment privileges, for example. So most mortgages have 15% to 20% prepayment privileges. On discount mortgages, you'll often find that they have reduced prepayment privileges. So maybe it's 10%, maybe it's 5%. And the reason why they've reduced the prepayment privileges is because they know that if you've got less prepayment privileges, then you're going to have to pay that mortgage out slower over time, and therefore, even at the lower rate, they're going to earn more interest off of you because you can't pay it off as fast. They also know that you can't, at the time that you want to pay out the mortgage, go and drop 20% on the mortgage, pay out $80,000 on a $400,000 mortgage, and lower your penalty because you've reduced the amount of your mortgage. They're just smart that way. Banks aren't stupid. They know how to get you to pay more over the life of the mortgage. Lower rate in exchange for less features is basically a way for the bank to make more money, not necessarily for you to save money. Don't forget that. So, product also comes with other things like restrictions. Most of the products that are discount mortgages, clickbait mortgages, they have one major restriction. It's called a bona fide sale clause. So what's a bona fide sale clause? It is a clause that prevents you from paying out the mortgage unless you sell the property. In other words, you can't refinance the mortgage and you can't switch to a different lender in the event that you can get a lower rate at a different lender. So in other words, you're stuck with the lender that you're at. Now, in some cases, you're stuck at the lender you're at and you can still refinance there. But in a lot of cases, you're stuck at the lender you're at and they won't allow you to refinance at all. And that's super dangerous because in times, especially like what's going on in 2020 here, having access to your equity can be really, really important if you need to get money out of your property fast. And the bona fide sales clauses prevent that. It's honestly the feature in a mortgage that would recommend people avoid more than any other feature, or in this case, I guess it's actually a restriction in the industry. Now, let's also talk about penalty, because oftentimes with these low rate mortgages, these clickbait discount mortgages, you also have higher penalties. And those penalties can obviously be a pain in the butt for multiple reasons. One is because, you have to pay more to get out of the mortgage. 2, if you want to switch to another lender, the key thing about switching to another lender for a lower rate is that the savings on the lower rate exceeds the amount of the penalty. And the higher your penalty, the less likely that is. And the other thing is when you go to sell a property, you want to be able to pay out your mortgage and have a low penalty because you want to actually have the option to leave the lender you're at when you go to move. And the reason why is because, and banks will tell you this all the time, banks will tell you, don't worry about the penalty. You can always port the mortgage and you won't have to pay the penalty. But they know that once you're moving, and you've got this massive penalty that they've got control, because the fact that you have a massive penalty means you're probably not going to pay out the mortgage. And what that means is that they can charge you whatever they want. And banks do this all the time. They say, yeah, don't worry about it. We'll give you a really good rate right now. And then when you go to sell, we'll port the mortgage. You go to port the mortgage, you're now getting a bigger mortgage, and the new money is going to be lent to you at a significantly higher rate than what you would get if you're getting a brand new mortgage. So penalty matters. And I think, I don't know whether it's product or penalty that matters more, but I can tell you unequivocally they both matter more than rate. So those are things to watch out for on those clickbait mortgages. And the other thing that you'll see and how you identify these clickbait mortgages is people will say, oh, it's exclusive to us, it's a special rate, it's a limited time offer. Those are all dead giveaways for a clickbait mortgage. So how do you avoid these? How do you avoid this crappy mortgage? Well, what you do is you talk to an experienced broker and you say, I want to pay a really good rate, but I want to have good prepayment privileges. I want to be able to leave the lender anytime that I want. I want to have a low penalty, and I want to make sure I've got the best overall mortgage for me, and I'm okay with paying a little bit more for it. And then you calculate the difference per week that you would pay for a higher rate mortgage. So in a lot of cases, you've got a lender that's offering 1.79 or a broker that's offering 1.79, and the going rate's 2.04. It's a 0.25% difference. Well, what's the difference between the 1.79 and the 2.04? Usually it's a cup of coffee a week per person on the mortgage. It's really a low cost. So when you ask yourself, am I willing to pay or forego my Starbucks once a week in exchange for a mortgage that has more flexibility, that I can pay out, that I can move to a different lender at a different time, that when I go to sell this house 3 or 4 years down the road, I'll be able to have some negotiating power and be able to move to a different lender if I so choose, and ultimately save thousands, if not tens of thousands of dollars in the first 5 years, let alone the next 20 years. Is that worth it to me? And for most people, the answer is absolutely. And if it's not, well, there's not much I can do to help you. So that's discount/clickbait mortgages, a term I just coined today, clickbait mortgages. I like it. And if you enjoyed this video, do me that favor, hit the subscribe button, hit that notification bell, and please hit the like button so more people like you can see it. Cheers.